Welcome back. You're watching us here on Chartbusters. Let's talk about the building product space, because lately we got a note coming in from Motilal Oswal which initiated coverage on this entire space with a positive bias on CenturyPly. They have a target of 958 rupees a share, and they believe that, the jump in real estate registrations, commercial projects which are coming under implementation, and rise in private capex along with a shift into branded should help the cause of CenturyPly boards and a lot of the other players in the company, in the sector as well. Keshav Bhajanka, the executive director at CenturyPly boards, joins us now. Keshav, all these factors that brokerages are talking about aren't new. We've been speaking about this for last many years, that there is accelerated shift towards organized players, the housing demand is coming back, and you guys have a premium offering out there along with the distribution brand, all of that. But the last 2 or 3 years have not been particularly good for your industry. Let's look ahead. What Motilal Oswal is expecting is a 15% revenue compounding with a 51% profit compounding over the next 3 years, which implies an EBITDA compounding of over 30% as well. Do you think these are realistic numbers, and do you think you guys can actually achieve that?
Good morning. Thank you so much for having me on the show. I think that while the industry has suffered to a certain extent, over the past couple of years, we have done reasonably well. If you look at our performance in the plywood and the MDF division, they have been fairly strong. I think growth has been in double digits. And in MDF in particular, it has been 20% plus. In plywood as well, we have been close to 15%. So with the new capex that we have done, whether it is in particle board, laminate, MDF, or the capex that we are about to take up in plywood, I think that this 15% plus CAGR does definitely look realistic. Our objective will always be to beat the same. And the majority of the large capex that we had done is behind us. As such, now debt is going to be coming down quarter after quarter. Operating leverage is going to give us better profitability. So I think that the guidance that we have given for the current year, we are well within range for the same. And going forward, I think 15% profitable growth, that does not seem to be a challenge.
They are talking about, Keshav, Motilal Oswal is talking about 15% revenue growth, and they're talking about 50%, 51% PAT CAGR over the next 3 years.
We just flip the digits, 15 and 51.
Yeah. What do you think? Doable?
No, I agree. And that is what I was saying. 15% plus profitable growth, because now with growth, as you know, fixed overheads, they tend to remain fixed. They don't increase in the same percentage. As alongside that, the depreciation and interest, when you're on lower operational leverage, then they tend to hurt profitability substantially. So with our operating leverage increasing with higher capacity utilization, I think it is a realistic ask.
That's a realistic ask. Let's talk about the margin levers for you as well. What are the growth drivers? You've spoken about capacity utilization as one, increased revenue flowing through the margins as well. If you could put numbers to that, when we're looking at, say, your business 2 or 3 years from now, you've given us an FY26 guidance. Last year, you were 10.7%. You had said it'll improve from here on. This year, first half, you're around 12%. Where do margins go from here on? Do we see them around mid-teens, low teens, or do they sustain at these levels itself with the revenue ballooning?
I think over the next couple of years, we will comfortably be back at 15% plus EBITDA margins for the company as a whole. And that is the target. For the current year, as you're well aware, we have given margins of 12 to 14% for plywood, 10% for laminates, 15% for MDF, and steady state margins of 15% for particle board. Once we ramp up capacity, I think we're well in line to achieve all of those.
So you will achieve all of that, and say by FY28, you will have 15% plus margins for the entire business.
Yes.
All right, Keshav, in plywood, I was looking at it, your volume growth actually is far superior than any of your peers in the industry as well. What are you doing so right? What's going on there?
I think that, it is about consistency. In terms of quality, we have been the highest quality manufacturer of plywood in the country for 4 decades now. And I think that the customer's confidence in us is showing through. Like you had mentioned at the start of the interview, that there is a trend towards more branding, towards people preferring branded products as opposed to unorganized products. So that definitely plays into our hands. Alongside that, we have done a lot of work on efficiency, operating efficiency on the ground to increase our margins. And branding has been a very sustained effort on our part. So I think that all of these things have culminated in strong growth backed by profitable growth.
Okay, all right. Keshav, also give us an updated market share, on the different verticals, plywood, laminates as well, if you could help us out.
So I think that, it's difficult to give you any sort of authenticated numbers because in our industry, in plywood, even in laminates to a large extent, there's a large component of the unorganized sector. But what I can say is that in plywood, we have definitely gained market share. In laminates, I believe that we might have lost a certain amount of market share because of some operational reasons, because of some deferments and some decisions that did not pan out well. We are now looking to regain that lost market share. In MDF, we have gained substantial amount of market share, and in particle board, with the commencement of our new capacity, you will see us rapidly gaining market share.
Right. So the last known number that we had from you was 6% in laminates, 7% in plywoods. This was the overall market, I believe. And in organized, you were targeting more than 25% share in the plywood business. Where are those numbers at right now?
I think in plywood, we'll comfortably be at close to 9% of market share.
Got it. And the others, laminates, you said you've lost. Last number was 6%, so are you around 5?
Be slightly, I think it'll be range bound, maybe 5.5 to 6.
Okay, all right. Keshav, what about the timber cost? How are the trends out there? Is there some softening? And softening of timber cost could be good for the business, but there could be a risk as well. The unorganized market as well could start coming back. How do you see things pan out?
I think one strategic advantage that we have is that we have 3 board-based factories and we have 3 factories that are dependent on domestic timber. As such, we have a wonderful mix. So even if domestic timber prices fall, the cost of imports, that gets negated only as far as the 3 board-based factories are concerned. So the decrease in domestic timber prices will be beneficial for us. And I think with the operating efficiency, that is not going to lead to any sort of a fall in prices or a fall in margins. Having said that, currently what we are witnessing is that while timber prices seem to have peaked out, it isn't that they have fallen drastically. They are hovering close to where they were, say, one and a half years ago.
And what about chemicals?
Chemical prices have seen a certain bit of a jump, but it is volatile. It depends on a number of factors. Right now, I believe with the entire stalemate with regards to the US and India and sanctions on Russia and so on and so forth, they might be volatile for a bit, but we haven't seen any major spike. There were slight spikes. I think these will also fall in line shortly.
Just a couple of questions before we let you go, Keshav. One is on the particle board utilization. You have expected about a 40% jump this year with steady state margins of 15%. First year would be low single digit margin. So just wanted to understand FY26, what's the utilization and revenue target along with margins on the particle board business? And the second part, you were looking to increase your capacity in South India MDF by about 25% by debottlenecking. You said you will mull over that in the second half of this year. Have you had any clarity?
Yes, on both. So as far as particle board is concerned, I think next year we'll be at 60% plus in terms of capacity utilization and double-digit margins or close to double-digit margins. As far as MDF is concerned, it was a good problem to have because we wanted to take the extension earlier. We are seeing great demand traction on the ground, which reflects in our numbers, of course. So in line with the same, considering that the demand for our products normally is slightly subdued during the monsoon season, we have planned to take our capacity expansion in the month of April next year. So yes, it is a firm decision. And going forward, current year, I don't think, would have been very pertinent because we are seeing a lot of demand traction. We couldn't lose out on the market, but April should give us an opportunity to do the expansion, which will have a downtime of about 30 to 40 days for the South plant.
Things looking up for you appears, Keshav, and we wish you well. Final question, what about the CFS business? You're looking to sell it, right? Is there an update? Should we expect something before the end of this fiscal year?
So currently, we are very happy that the new port terminal operation that we have undertaken, that is likely to start within the current quarter itself. And this is going to be a major boost to the CFS business. It will lead to a complete change in the logistic business in terms of margins and in terms of growth trajectory. And post that, yes, there is a plan to monetize that asset. We'll keep you posted as and when we take a decision.
All right, so you're waiting for some regulatory improvement to come by to make that business look a lot more plumper before you go ahead and unlock value out there. We take that point, Keshav, and we'll obviously keep having a conversation with you and keep pressing you on these numbers and the plan for the CFS business going forward as well. Thank you. As always, a pleasure speaking with you. With that, let's take a short break. And as we do that, here's some good news for all.